Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to Pasture to Pen, a new series from the Ever.Ag Insights team. Each week we will bring you news and updates on the cattle markets with the intention of helping producers manage their risk. I am your host, Todd Rowen, joined by my co-host, Trey Freeman, and our guest speaker, Jenny Wackershauser. Good morning, all.
Morning.
Before we get started with the futures update, I will timestamp this episode. Today is April 4th, 2023, 9:40 a.m. Mr. Freeman, please lead us off with the futures update, sir.
Yeah, a brief recap in last week's action. We saw April and June cattle finish over $5 higher on the week, and April and May feeders $7 to $8 higher on the week. Cash was the driver as we saw packers with some aggressive buying starting earlier in the week, eventually paying $3 to $5 higher overall than the week prior. Yesterday morning, cattle futures opened under pressure. Feeders dragged fats lower on the day. This was a count on higher grain markets, aided by OPEC's announcement over the weekend for their plans to slash oil output by 1.2 million barrels a day, beginning in May. This had crude gap $4 higher on the Sunday night open, and grain sharply higher, attracting sellers to the feeder market with eventual spillover selling into fats. As far as this morning, it's a nice rebound in the cattle complex. Lackluster day yesterday. Fat cattle currently trading 40 to 60 cents higher across the board. April feeders managed to take out yesterday's high here in the last 20 minutes, trading at 20.62 currently. So a strong start to the day and a nice bounce back after a bit of a jittery day yesterday with the spike we saw in grain prices coming into the first of the week.
Yes, yeah. Thank you for that update, Trey. We did see cattle futures, like you said, break pretty hard to the low side. That cut by OPEC sure sent the grain markets upwards. And speaking of the grain markets, I will now introduce Jenny Wackershauser, who is a master grain and dairy broker / agent on our dairy and grain team. Jenny, welcome to the show.
Thanks, MT. Thanks for having me this week. And it's nice to introduce our little feed team a little bit to our livestock client base as well. So we're
absolutely
happy to kind of talk in with you guys and go over what our prospective planting and quarterly stocks report on Friday made for a bit of a mixed market. We came in with what's been looked at as a bearish prospective planting report, and yet a quarterly stocks that's a little bullish for near term. So we saw everything perk up a bit going into Friday, and now here yesterday there was a nice bump again following the OPEC announcement that faded as we went into later part of the day. So I think we are still going to be fairly range bound until we get a better idea of how the actual planting progresses, because some of the areas with our 92 million acres of corn that are expected, some of the biggest growth is North and South Dakota. And so obviously anybody who's watched a weather pattern for the last 3 months know they have a very nice snowpack going on. So we are curious to kind of see how that actually thaws out. So they're happy to have the moisture, but we have 2 months. We're not ready to call that prevent plant yet, but we got to see if they can actualize those increase in acres. North Dakota is our biggest growth area for both corn and soybeans. So when we look at the balance sheet, we're still tight on everything. So really, as we look ahead to fall's balance sheet, we need to still have perfect conditions for planting, growing, to build this balance sheet back up where we are really bearish for fall. Brazil continues to have a monster crop. We have to give them time to actually get it to a port and get it moved. So there's still a lot of what ifs in this market to get us into fall and get us to a cheaper feed price. I have encouraging guys not to lose sight on that and make sure we're protecting for a poor growing season. And especially if it's an I state, let's make sure we don't lose sight of the what ifs in this grain market. If we break back through $6 corn, what does that look like to your balance sheet? If we break back higher on proteins, or we have a poor hay season in areas and don't have that grass available for the livestock guys, like if you're buying corn gluten feed again, if you're buying a soy hull pellet, like plan around some of those factors again as you're kind of looking through the year. The WASD next week on April 11th, we're going to have to see if USDA actually adjusts their feed usage to represent that lower than expected stocks. Their feed residual tends to be where they make those adjustments. We know what exports are. We know what ethanol usage is. So then that's their area they can make those adjustments on the pullback and things. So overall, I think we're going to be fairly range bound in our old ranges until we get planters moving a little more heavy up here in the Midwest.
Thank you very much, Jenny, for that grain update. I like how you mentioned the planters getting ready to plant. Of course, that is always dependent upon weather. You also mentioned snow in the Dakotas, and yes, very much so. There is a blizzard that is sweeping or has already swept across Colorado and Wyoming and is headed straight for those peripheral corn states that you mentioned, South Dakota primarily. They already have snowpack, and it looks like they are fixing to get a whole lot more. Speaking of winter weather, we have continually persisting winter weather in the Pacific Northwest. They have snow, they have ice, it melts, refreezes, melts, refreezes. Sounds like Montana, Idaho specifically are experiencing that type of weather pattern. A little bit of fire warning and wind relief in Nebraska and Iowa. Eastern Nebraska specifically is supposed to get a pretty good amount of rain, as well as northern Missouri and most of Iowa. Today in the South Plains, we continue to be dry, mixed with potential 70-mile-an-hour gusts. So just kind of business as usual down here, but happy to see that others are getting moisture. Moving to the demand side of the equation, specifically in the cattle markets, we are heading into a strong demand season. We are approaching grilling season. We've got some spring and summer holidays coming up. We've got Easter here in a week. We've got Mother's Day, Memorial Day, Father's Day, as well as wrapping up the summer season with July 4th. Strong grilling seasons. Retail prices in the grocery stores still remain very strong. We continue to see upward choppiness in the choice select spread. Both of those prices have actually moved up week over week. We are still seeing strong margins on the select side of the equation, specifically in the grocery stores. They are able to blend that select meat with higher grades. They are also using in-house labeling to push those select blends. So what does all of this mean? We saw a little bit of weakness in the futures market yesterday, followed by some recovery today. We had a very strong week last week. We are also seeing highs that we haven't seen since 2015. I'm not going to say we're over elevated, but we do seem to be in an elevated market. It seems like we've had two warning shots with the banks a couple weeks ago, or a few weeks ago now. And then yesterday with the OPEC cuts. We know where supply is. We feel like we have a decent pulse on demand, but this market isn't just susceptible to itself. This cattle complex is susceptible to other markets. Would you agree?
Yes, I'd agree. We got to remember this is a futures market, so it's pricing in cash expectations. They're heavily built in. Look at August through November feeders. We're trading 221 to 227. What were the highs we saw back in 2014? Is 2040. November's already trading 227. Look at live cattle, December 2023 through August of 24. We're trading 170 to 175. So we got to remember that a lot of this bullish expectation is built in. Now, I'm still optimistic here, but there is a lot of air under this market. And to your point, just like we saw on Monday, on Sunday night's open in crude, that unexpected jump again reveals the sensitivity of cattle futures to outside markets. First, the run on Silicon Valley Bank 3 weeks ago, that spooked global financial markets, bled into commodities, and now this surprise announcement by OPEC, creating a domino effect, eventually leading to the pressure in feeders yesterday, and fats, simply following suit. So we have to remember that. Don't get too comfortable. Look at your margins, explore the tools on the board, LRP, etc., and don't get too comfortable. Take action.
Absolutely. Be happy, but like you said, don't get too comfortable, because sometimes you don't realize when you're on stilts rather than on a strong foundation.
Right. Right.
That is a wrap for this week's episode. Thank you, Jenny. Thank you, Trey. Really appreciate y'all's input. Thank you to the entire Ever.Ag Insights team. Thank you, Paige. Thank you, Corey. And that is a wrap on episode 3 of Pasture to Pen. If you haven't already, please hit that subscribe button, hit the alerts button, and we will keep sending you content. Until then, stay safe and pray for rain.